from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the death toll by COVID-19 in the U.S. has surpassed that of the 1918 influenza pandemic, a milestone many experts say was avoidable after the arrival of vaccines. And now the U.S. is doubling down on travel requirements for vaccinated foreigners and unvaccinated Americans. Plus, Ted Lasso and The Crown steal the show, with streaming services like Apple TV Plus and Netflix racking up more Emmy Awards than any traditional television network. What's the next big thing for streaming beyond original content? We'll discuss. And Pinterest co-founders are hit with a shocking lawsuit. The plaintiff, a woman who claims she contributed critical ideas that became the foundation of the product, but never got paid. Christine Martinez joins us in an exclusive interview to talk about her case against Pinterest CEO Ben Silbermann and co-founder Paul Sciarra. But first, we have to start with Monday's market sell-off. U.S. stocks falling the most in almost a year. Let's get all the details with Bloomberg's Kriti Gupta. Kriti, what's happening here?
Well, Emily, we've been talking about this on your show. You've had record after record with only a handful of names pushing the broader index to those records. So what does it do? It creates a coiled spring kind of effect. And then you get a day like today where you see broad selling across the board. At one point, the S&P 500 was down almost 3%, Emily. And what led the charge? It was, of course, big tech to the downside. And where did the money go? It went right into treasuries. So you see yields actually going down as much as 5 basis points, even more than that earlier in the session. A lot of this has to do with simply the risk that's piling on. We'll get to the fundamentals in a second, but a lot of this also had to do with technicals. Remember I said that coiled spring? It's a shallow and shallower pullbacks. We weren't getting that reset that we needed. This is the chart that I like to look at when we're talking about drawdowns. We like to get 5%, 10% corrections as kind of the market flushing itself out. But all the way since November, we haven't really gotten that. No more than 3% today, hitting almost 4% as a drawdown, of course, from the September 2nd peak. So what was behind it? The question here is that a lot of it had to do with macro risk, really coming out of China. The Evergrande story really was the straw that broke the camel's back, in addition to that coiled spring I just mentioned. And this is the chart that I think really tells the story. You've seen that Chinese regulatory scrutiny get worse and worse and worse, to the point where from the February peak, you see the Chinese ADRs index, which is the NASDAQ Golden Dragon Index, drop 50% from its peak. We had a little bit of a bounce back, and now down again, down 51%. Emily, the question is, does the selling continue, or is this simply a one-day ordeal, especially as we go into the Fed on Wednesday? That's what's going on the macro front. Let's get to the micro with Ed Ludlow.
Well, that risk-off sentiment certainly spilling into specific cryptocurrencies. As we move into Tuesday's session, you can see actually most cryptocurrencies holding steady, but vast selling throughout Monday's session. And what happened was that impacted crypto-related stocks. You see Coinbase down 3.5%. Coinbase also, of course, scrapping plans to have a lend facility after some conflict with the SEC. We can dig into that later on. And you also mentioned Chinese ADR. Well, we saw some pressure from those different stocks, Chinese companies listed on U.S. exchanges, of course. This is part of the contagion discussion that we've had. Pinduoduo, JD.com, Baidu, some pretty big percentage point declines, but also the biggest points decliners on the NASDAQ 100. Finally, some news breaking after market on Monday. Robinhood, finally, this long-awaited feature of a crypto wallet and the ability to transfer and hold cryptocurrency. You can see Robinhood shares that actually initially risen in after-hours trading on Monday, now down a little softer by 0.5%. Emily.
All right, Ed, thanks so much for that. Meantime, the U.S. will soon reopen its borders to most foreign travelers, as long as they're fully vaccinated against COVID-19. The White House said the new measures will also involve stricter requirements for COVID testing and contact tracing. This comes as the number of Americans who have died of COVID-19 has now surpassed the number killed in the 1918 influenza pandemic. Our Bloomberg political news director, Jody Schneider, joins us now with more. And Jody, these new travel rules, not just for foreigners, but for unvaccinated Americans. What do you make of them?
Well, the White House is sort of doubling down on its trying to split the vaccinated from the unvaccinated. So it's not so much the foreign travelers and the domestic travelers having different rules. Now it's sort of everybody, right? If you're unvaccinated, you are not welcome in the U.S. essentially. And if you're an unvaccinated American, you're going to have trouble too. But what they're saying, and the airlines, of course, like this, and their stocks went up as a result today. But if you're vaccinated, you are welcome. You know, you have to prove it, and there's still testing requirements. But at the same time, it's much easier to get in. Right now, if you're an overseas traveler and you're in certain countries, including the UK, including, in large parts of the world, you'll have a lot of trouble getting in the US. Now they're saying if you're vaccinated, you're welcome here. So this is part of the, it's almost a carrot and stick approach from the administration, right? Saying we will, if you're vaccinated, you will get benefits. If you are not, there will be prohibitions. And as you note, this comes as the U.S. is again in the midst of, really large numbers of hospitalizations and deaths from COVID. Those went way down when the vaccination rates started to go up, but with them plateauing and that Delta variant spreading, we're now seeing almost 2,000 deaths a day, and we are at that number. We surpassed 675,000 deaths, which was the number of the pandemic in 1918. Now, of course, the nation was only about a third as large as it is now, so this is saying that, this is a different kind of scale, but still, that's a pretty sobering number.
So incredibly alarming. And there was this Brazilian diplomat that just tested positive for COVID-19 in town for the UN General Assembly. Meantime, obviously, many of the unvaccinated Americans are children, and there's not a vaccine ready yet for them. What progress has been made on getting vaccines for kids? What are we learning about the trials of Pfizer and Moderna as to when and whether these vaccines will be ready?
Well, there's some good news, I think, for parents on that front. Pfizer today said that its trials, its large-scale trials for children, those ages 5 to 11 who are now not eligible, were very, they're proving very successful, that they seem to be very, they're resistant to, they're offering a great deal of protection to the virus, and also that they've been pretty safe, that they haven't seen a lot of reactions to that. So that's good news. And we had the most famous advisor on COVID, Anthony Fauci, saying he thinks it will be soon that we will start seeing authorization for a vaccine for children. Of course, this can't come soon enough with school starting, in-person learning going back to becoming the norm in most parts of the country, and some outbreaks occurring, again, in areas where there's a large number of unvaccinated people, but that still has parents worried. And I think a lot of parents will be very this will be very welcome news that this is coming, they hope, very soon.
All right, Jody, thanks so much for that roundup. So much news to digest every day. Appreciate it. Meantime, Coinbase is bowing to pressure from U.S. regulators and tabling plans to launch a product that would pay users interest for lending out their tokens. Coinbase's about face comes as SEC Chair Gary Gensler takes a tougher line on crypto products that may fall under the agency's purview and the platforms that they trade on. Bloomberg's Jesse Westbrook joins us now with more. So, Jesse, what do you make of Coinbase giving in here, where they, they had sort of indicated they were going to stand their ground?
Well, yeah, this is really a pretty remarkable SEC case and action. It's very unusual for the SEC to be this aggressive about threatening to sue a company before they launch something, before any actual, in the SEC's eyes, misconduct occurred. Usually they're sort of, going after conduct that has already happened. So it's a really new tact from SEC, and I think it sends a signal to the entire crypto industry that, if you are considering things that we don't like, we will come after you, and it's a pretty strong hammer to get the market responses they want. I mean, obviously, there is a situation unique to Coinbase that they're a public company, so the risk of an SEC lawsuit and they're U.S. based, so the risk of a U.S. lawsuit is much more SEC lawsuit is much more severe to them than to a lot of their competitors who are sort of operating in the shadows overseas.
Is this a big loss to Coinbase in terms of a potentially big future revenue stream?
Well, I think one issue here is, this is something that crypto platforms are increasingly doing, offering yield for the crypto that's sitting in your account, much like a bank would do. And it is arguably a pretty big competitive disadvantage in the sense that if I can go to a different trading platform that is paying me just 5%, for my crypto to sit there, isn't that the platform I'd want to go to? Because otherwise I'm earning nothing. So I think that will be an issue that Coinbase will have to figure out. I mean, it's if competitors can offer you, you can just make money even if you're not trading. That's a pretty attractive option, it would seem.
All right, really interesting turn of events here. We'll see how this one plays out. Bloomberg's Jesse Westbrook, thank you for that update. Meantime, the SEC is said to be investigating video game company Activision Blizzard over its workplace practices. This, according to the Wall Street Journal. It reports the company and several senior executives, including CEO Bobby Kotick, have received subpoenas. This following a lawsuit from California's Department of Fair Employment and Housing alleging the company fostered a frat boy culture and discriminated against female employees. Coming up, the streamers reign supreme at the Emmys. Big wins for Ted Lasso and the Queen see Apple and Netflix nabbing the biggest awards at television's Night of Nights. We'll talk about what it means for the industry with Matthew Ball, managing partner at Epilion and former global head of strategy at Amazon Studios. That is next. This is Bloomberg. The streaming industry was the real winner at the Emmy Awards. Apple TV Plus won Best Comedy Series for Ted Lasso, and Netflix's The Crown won Best Drama Series, the first time Netflix has actually won that top prize. In fact, Netflix nabbed 44 awards in total, taking home more accolades than any other network. Matthew Ball, managing partner of Epilion and former global head of strategy at Amazon Studios, joins us now to discuss. Matthew, what does that tell you? I'm sure it's not necessarily a surprise.
No, it's not a surprise, but it certainly reflects the way things have changed over the past few years. This was the first time since 2014 that HBO did not take home one of the top prizes: Best Comedy, Best Drama, Best Limited Series. Notably, HBO itself did not have any of the nominees. It was HBO Max, the Max size, that did. And then, of course, we had Netflix's first win, Apple's first win, and Disney Plus's second year with a Best Series nomination. Things have changed.
Would you say this is a changing of the guard? Can Netflix and Apple hold on to these leads, if you will?
I would say the changing of the guards happened several years ago. Netflix has often led in total nominations. Where it lagged was in the wins. But certainly if you take a look back to, I think, 2015, that was the first year in which the streaming or streaming-centric networks had the majority of nominations.
So where does that leave Amazon, where, of course, you used to work? I mean, are we seeing a consolidation here in terms of the folks who can really compete and lead the pack?
I certainly wouldn't count Amazon out. Certainly they had their first nod for The Boys, another outstanding show that was on former President Obama's top of the year list. And then separately, we had the perennial winner, Marvelous Mrs. Maisel, which did not air during the period. And so I would expect that going forward, we see more strength. But for the most part, we should look forward to a future in which HBO Max, Netflix, Amazon, Disney Plus, and Hulu do, in fact, dominate year over year, probably taking 7 of 8 nominations in every single win.
Do you think there's a quality versus quantity problem? It's as if there are so many amazing shows out there, but sometimes it's hard to find them. You know, I'm done watching Ted Lasso, and I don't know what's next.
There was always a demand for another outstanding high-quality television series, but I think what is clear is how the lack of scale disadvantages a program's shot at success. For All Mankind was an outstanding show on Apple, but it was probably disadvantaged by the fact that Apple had a very small audience, just in the same way that Ted Lasso benefits in the second year from a much larger Apple. When you take a look at a show like Queen's Gambit, one Best Limited Series, one of the biggest shows of the pandemic, I would guess that had that aired on a smaller network, perhaps a Showtime or an Epix, it would not have been the hit that it was. That's a reflection not just of outstanding storytelling, but the consequence of the platform chosen.
Bloomberg Intelligence just published a report saying that Disney Plus, they believe, could surpass Netflix in terms of subscribers in 3 years. What are your thoughts on that?
I think when you take a look at the global market, we see over 750 million ex-China pay TV homes. By the end of the decade, that is probably a figure at 900 to 1 billion homes. There are many countries that have never paid for pay TV, and when they have, it's a bare fraction of the audience, Japan, Portugal. We're probably looking at a future where the largest streaming services have 300, 400, potentially 500 million households. I think it's unclear whether or not it's going to be Netflix or Disney at the top.
Now, your metaverse fund, meantime, just surpassed $100 million in assets under management. And I know you think this could be a multi-trillion opportunity. It'll take over the current economy. How and when do you see that happening? And what sort of entertaining happens within that?
It's a great question. The CEO and founder of NVIDIA recently said that he believes that the economy of the metaverse will exceed that of the physical world. And that is mostly based on the fact that most of the future world will run in one way, shape, or form through the metaverse, much like most of the world today is dependent upon the internet. That's a multi-decade transformation, but at least over the next decade, I think we can see substantial shifts of entertainment, of healthcare, of communications, as well as many other categories such as fitness or meditation shift over.
There's so much battling now for who will own the metaverse. You've got Epic and Balenciaga launching this high fashion collaboration through Fortnite. You've got Mark Zuckerberg also saying he wants to own the metaverse. And yet the vision that's painted is of a decentralized future. What will the role of actual companies be in the metaverse? And how will some of these sort of ethical questions of who runs the metaverse be answered?
I think the best way to think about this question is to compare so-called Web 2.0 with the original web. Even today, we have some of the most powerful companies in the world controlling most of what we do online. At the same time, none of these platforms is the internet. Apple is not the internet. Facebook, Google, Amazon are not the internet. They're very powerful, horizontal, and vertically integrated platforms. So in the future, the likely outcome is that we have a similar construct. There are very powerful companies, but they are not the metaverse. They are dominant participants in it. And yet, if you go to the early web, it was far more decentralized. AOL at the peak of its power, Yahoo at the peak of its power, even Facebook, before many of the big tech giants had emerged, had nowhere near the control that they do today. The big hope among the decentral community is simply that the metaverse will be less controlled than it is today, but certainly there will be dominant players.
All right, fascinating. Well, I'm glad we have you to chart the path forward and make sense of it all. Matthew Ball of Epillion, thanks for joining us. Coming up, investing in a greener future, we hear from Bill Gates and Larry Fink about raising $1 billion in corporate funding as part of a clean energy push. Those details next. This is Bloomberg. The Fed holds its two-day meeting this week before issuing its latest policy statement. We will be listening for any comments on inflation, as well as looking for signals on a timeline for scaling back monthly asset purchases and, of course, the continued impact of COVID-19. Bloomberg will bring you all the details in our special coverage this Wednesday, 1:30 p.m. Wall Street time. Meantime, Bill Gates has raised more than $1 billion in corporate funding for his Breakthrough Energy Catalyst program. And he's got big-name backers, including Microsoft's Satya Nadella and BlackRock's Larry Fink. Gates and Fink spoke to Bloomberg's Eric Schatzker about the biggest challenge for this venture, bringing costs down in green industries.
At least a few of them, given the breakthrough technologies being developed, green hydrogen could get down to a very low price within 3 or 4 years. Sustainable aviation fuel, there's quite a few approaches there. The one that's the hardest is direct air capture, because that mainly has an environmental benefit. It's not a product, like the other three are. And so that one, I'd say it's over the next 10 years that we need to drive that down. But the other three, I'd be very disappointed if we don't see a dramatic reduction in the green premium, even in less than 5 years, because that should let us do 2 rounds of projects. The first projects, and then take the learning from those the first 2.5 years and do a second round that will bring the cost down even further. And the government's, a lot of that money that's being allocated has to be spent in a defined time period. And so, getting Catalyst going now is very, very timely. We need this private sector engagement. And in some ways, these private sector companies we have represent such a depth of expertise that it's going to be easy for the governments to benefit from that as opposed to going to each company individually.
Eric, I would add one thing.
Please.
Once the technology or a project shows commercial application that we could actually fundamentally bring down the green premium, the amount of private capital that would be running towards these projects would be enormous. The amount of capital that's standing by right now looking to put money to work in these types of strategies is enormous. Now we need to make sure that we're proving it. We need to make sure that it's reliable and we can build it. And so I'm not frightened about where the money's coming from. I just want to make sure that we have the science and technology and the viability. Once we know that, the capital will be there.
Is that just ESG money, or is that any risk-seeking capital, regardless of, what the people behind it think about climate risk?
I would say within 5 years, climate is just going to be another risk factor across all investing. We may not even have ESG investing anymore, because ESG is just another risk characteristic of like everything else we have. And so I would say all investors, when they see an opportunity to invest in projects that will transform a society that has great upside, the amount of capital will be there. Right now, I'm talking about more of its ESG capital, but I'm very confident if we can prove the technology and the technology works, if we bring down in a substantive way the green premium, the capital will be there. And I don't care how we define the capital. It'll be capital seeking opportunities to make a good risk-adjusted return for the investors.
Larry Fink there, along with Bill Gates, speaking with Bloomberg's Eric Schatzker. Coming up, we're going to hear from a woman who claims she helped conceive the founding ideas of Pinterest, but never got credit or compensation. In an exclusive interview, we will take a closer look at her lawsuit and how Pinterest has responded next. And let's look at what's ahead this week. We've got more tech earnings Tuesday with Adobe and Stitch Fix out with quarterly results. Wednesday, we're going to see more discussions about boosters, this time from the CDC. We're going to see what recommendations the CDC makes there. And Thursday, the White House hosts a summit with companies in the chip supply chain to discuss how to ease the crunch. Of course, we'll bring you all the details. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. An Oakland-based digital marketing strategist is suing Pinterest, claiming the founders of the company used her ideas to launch the platform. Christine Martinez says she came up with key concepts, including allowing users to create pin boards to reflect their interests, but was never compensated for her ideas. Pinterest has responded to the allegations, saying, quote, "We're proud of what we built at Pinterest and appreciate all the pinners who helped shape the platform over the years. However, these allegations are completely without merit, and we will defend our position in court." Joining me now for an exclusive interview is Christine Martinez, a content creator and the accuser in the Martinez versus Pinterest case. Christine, thank you so much for joining us. Let's start from the beginning. What are the ideas you believe you contributed to Pinterest but were never compensated for?
Sure. So first, thank you so much for having me, Emily. I'd like to start by saying that, I actually helped to create the core concept of Pinterest. I created its utility, which at that period of time was a visual bookmarking tool. Most importantly, I found the community and introduced them and brought them onto the platform, a community of bloggers, designers, folks that I'd worked with many years prior to this. And last but not least, I created the marketing strategy that helped Pinterest, sort of expand in sort of the viral way that it did, that eventually led to the mass adoption of the website.
Now, at the time, you had your own lifestyle blog, you had your own e-commerce startup. As you say, you took them to conferences, introduced them to people. What did they already have by the time you started giving their input?
They didn't have anything. The period of time in which I started working with them, Pinterest was really just an idea. It was a drawing on a piece of paper that occurred at my apartment one evening, and there was no website. It was really something that needed to be figured out, both from its utility and beyond that in terms of its community.
You're suing for breach of implied contract, idea theft, among other things, and Pinterest says these allegations are completely without merit. How do you respond to that?
Well, I respond by saying, I know exactly what I've done and what I did at Pinterest and for Pinterest over the period of time in which I did it. And I know that Ben Silberman and Paul Ciara, they remember exactly who I am and they know exactly what I contributed. So I'm confident in my case and looking forward to continuing to work through this with them.
You say that they verbally agreed to compensate you many times. Can you tell us about those conversations and what was said?
Yeah, so we had countless numbers of conversations over the period of 4 years. This was a 24/7 venture. This was something that was being worked on constantly. And those were things that are often come up in conversation. I think at the end of the day, no one went into the situation, with an understanding that, they were going to tap into my subject matter expertise, leverage myself, my community, and my contacts there, and the years that I had established a relationship within that community. I think the idea that, you would bring someone in and not pay them and not credit them after, the enormous amount of work that went into that platform is simply absurd.
Now, you were never formally employed by Pinterest, as I understand it, and you didn't ask for a contract. So why are you asking to be compensated and credited now? Why not do this years ago? I mean, the company was founded officially in late 2009. They went public in 2019.
Yeah. So I'm really coming forth right now to claim what I've earned. That's simply what I'm looking for, is just what I've earned for the work and the years that I spent developing the product. It was explicit. It was known. The expectation has been there. So, I just don't think that there should be any surprises from anyone about, coming forth at this point.
Did you try to reach out to them before filing a formal lawsuit? I mean, did you think about that, or were they at all, were any conversations about this started before the lawsuit hit?
Yeah, that's something I absolutely thought about, and I've given a lot of thought to. I'll tell you, on IPO day, which was a really devastating day for me, they sent a very loud and clear message, when they didn't pay me or even acknowledge that I simply existed. And so, like I said, it shouldn't be a surprise. I certainly contemplated reaching out to Ben on that day. I actually started drafting an email. And at the end of the day, I realized on the other side of that email was a whole team of lawyers and just a lot of people that I realized, it would be best for me to approach the situation in a much more appropriate manner. And that's why we're here today.
I understand you have evidence to back up your claims. What kind of documentation do you have? Do you have a paper trail? Do you have emails or texts from that point in time?
Well, like I said, we were working very closely together 24/7 for about 4 years. So I'm very confident in my case. I'm very confident in what I have. And I'm very excited to move forward and again, work this out and receive what I've earned.
Can you tell us a little bit more about your relationship with Ben in particular? You go back to college, I believe. You were actually close friends. You were a bridesmaid in his wedding. Tell us a little bit more about your relationship with Ben and your relationship with Paul and how that developed.
Yes. So Ben and my then boyfriend in college and now husband were best friends in college. They were in the same residential college at Yale University. I was dating my husband at that period of time and spent a tremendous amount of time there. So we spent a lot of time together. Beyond that, when Ben moved from, DC to San Francisco, we picked up our friendship right where we left it. And these are people, Ben and Paul Ciara, included. These are two individuals that, came to my childhood home and opened presents with my family on Christmas morning. So I think that probably says a lot about the level of friendship that we had.
There are broader questions about how Pinterest treats women and people of color. The former COO, Francoise Brocker, sued the company, settled for gender discrimination. Two black women, Ifeoma Ozoma and Erica Shimizu Banks, have publicly accused the company of pay inequity, say they were victims of racist and sexist remarks at the company. Pinterest employees have staged a virtual walkout in response to some of these issues. Shareholders have sued the company and the board over its workplace culture. What do you make of this, especially given that this is a company that serves a majority female customer?
Yeah. So look, I'll say I'm not surprised. I wasn't surprised to hear about any of those things that came out. I think at this point, as you stated, Pinterest has a long, ugly history of anti-woman bias and behavior. I know how I was treated. I know what my experience was. So I wasn't surprised to hear about these things in the slightest.
And last quick question, what do you want out of this? What are you hoping for?
Yeah, I'd really love what I earned. I worked really hard on this product. I put my heart and my soul in it. And I think any creator that puts their heart and soul in anything expects that at the end of the day, at the very least, they'll get what they earned. So that's really what I'm looking for here. And I certainly want to send out the message that this is just not some way that you can treat creators. And I'm here to really stand behind that.
All right, well, we'll be following the lawsuit, and we do appreciate you sharing your story with us. Christine Martinez, content creator, thank you so much for joining us. Meantime, the restaurant payments company Toast has raised the price range for its pending IPO. The company now plans to sell almost 22 million shares at $34 to $36 a share. The deal could value the company at up to $18 billion. Toast software helps diners order online and in person. Plus, the payments company Stripe plans to hire dozens of new employees for its London office next year. It is part of a broader expansion in Europe as it prepares for a possible IPO. Stripe has headquarters in Dublin and San Francisco. It was last valued at $95 billion. Coming up, post-pandemic freelancing. Hayden Brown, president and CEO of the global freelance platform Upwork, joins us to talk about the latest workforce trends and the Great Resignation. Hordes of workers leaving their companies amidst the pandemic. That is next. This is Bloomberg. The impacts of COVID-19 seem to be sticking around, and with it, questions about whether to prolong working from home. Companies continue to weigh when to reopen their workplaces, as well as how to attract and retain top talent. Hayden Brown is the president and CEO of the global freelance hiring platform Upwork, and she joins us now for this week's Work Shifting segment. Hayden, great to have you back with us. Now, as the pandemic drags on, what new trends are you seeing in terms of what workers want and what employers want?
Yeah, Emily, I think the big trend that is here to stay with us around what workers want is around flexibility. Whether you are a full-time employee or whether you are one of the 20 million Americans who jumped into the freelance workforce last year, it's all about working when, where, and how you want to work. And I think that's one of the reasons that freelancing in particular has taken off in such a big way. And on the company side of the house, companies that I talk to are just saying, look, remote work is now part of our permanent go forward strategy. We're figuring out how we make this a strategic asset, because the war for talent has been with us for so long, and now remote work can be a competitive asset in breaking through that war for talent and reaching populations of workers that we were previously not tapping into because companies were looking in their own backyards. And that includes reaching into talent pools like the freelance economy, which has got tons of the talent that companies really need, but previously they were just not looking for because they were so used to working with kind of old and outdated ways of hiring, including, on-site, on-premise, which is now, I think, proven to be, very outdated as companies have figured out through the pandemic.
We've been hearing a lot about the Great Resignation. What's actually happening?
I think this is actually a peak point that's kind of culminated as workers have looked at the work that they're doing, their value systems, the trade-offs that they were making around work and life, and are stepping back and saying, wait a minute, I want something different. I want something more. And that's causing a ton of workers to not just shift from job to job, which is certainly a lot of what's going on in the full-time employment space, but also we've done a survey recently which shows that 10 million Americans are actually considering leaving full-time work and moving into freelance. So again, I think this is a peak point from a trend that was happening pre-pandemic with employee tenures shortening, with more and more workers joining the freelance workforce. But now we're in a moment that is going to be extended with a new normal that is represented by the Great Resignation, but really looks at the workplace being much more dynamic, people moving in and out of jobs and moving into freelance at a rate we have never previously seen.
So are some companies being flooded with new talent and others losing out, or are people resigning everywhere?
I think the pattern is really widespread, but where we're going to see, I think, a discrepancy is companies that really reject using remote talent as part of their strategies are going to be increasingly struggling, I think, to capitalize on where that talent is. Because what I hear is whether or not people are employees or freelance, they really want more flexibility. And that is one of the great lessons coming out of the last 18 months is people wanting those controls over when, where, and how they work. And you talk to somebody who is now being called back into the office, looking at giving up time. Maybe they were walking their kids to school or spending more time at soccer practice and really defining those boundaries differently. I think employers who don't listen to that and really are drawing firm boundaries in ways that really don't work for workers are going to be continuing to really struggle to attract talent going forward. So that's where there's going to be, I think, a challenge for employers that really don't listen to what the workers are saying they really want in terms of flexibility.
Where is demand coming from right now for freelancers in particular? And what is the supply like? What are the freelancers out there that you're seeing? What can they do? What can they provide?
So the demand is coming from really all segments of businesses. We serve half of the Fortune 500. They're leaning into this trend. We are serving small businesses, mom and pop stores. They also recognize that this is a great place where they can get talent. So the demand is very widespread in the market. And on the supply side, on the talent side, these are workers who have every type of skill, everything from, web development, software development, design, marketing, translation, writing skills. So what we've seen over the last year plus is really a broad-based realization on both sides of the equation that so much of this work can be done as freelance and can be done by skilled professionals working remotely. So this has been an amazing moment, although I think the supply side of talent is still ahead of where businesses are, because talented people have known for a long time they can and will work this way. I think it's more on the business side that people are figuring out that this can be real programmatic, sustaining work for them. And that's where we're really leaning into that opportunity to educate businesses how this can work for them, how they can build really meaningful relationships on our platform with these talented individuals. It's not here today, gone tomorrow. These are sustaining ways that people can really power growth and sustainability.
Interesting. We will be watching how it all shakes out. Thanks for helping us make sense of it. Hayden Brown, Upwork President and CEO. Appreciate you taking the time to join us.
Thanks.
Coming up, the first all-civilian-led space crew made their safe return to Earth over the weekend. We're going to recap their journey and talk about what's ahead for the commercialization of space next. Meantime, the new Marvel film, Shang-Chi and the Legend of the Ten Rings dominated the U.S. box office third straight week. Disney movie benefiting there from fewer new releases from competing studios. Shang-Chi is the first Marvel film with an Asian lead and is still only available in theaters. This is Bloomberg. SpaceX's Inspiration Mission 4 is back. Inspiration 4 mission, the four-person all-civilian crew splashed down in the Atlantic right off the coast of Florida Saturday evening, marking the first time an all-civilian crewed space shuttle went to orbit. For more on the historic milestone, I want to bring in who else but our own Ed Ludlow. Ed, you and I were trying to see it on Friday night from the Bay Area, but I'm not sure if we actually saw Inspiration 4, but we certainly saw stars in the sky.
Yeah, I mean, it was a dot right up until the moment that it came into Earth's atmosphere. And remember that Dragon is a fully autonomous system, even the part that brings it back down to Earth, that tracks its course and descent. And frankly, it was just perfectly executed. Everything that SpaceX said would happen did happen. You know, they came out 24 hours earlier and said that splashdown would be at 7:06 p.m. Eastern time on Saturday, and it was. And the crew were safe. They've gone under medical checks. They've gone under testing to make sure they're all right, and they are absolutely fine. And what's more is they smashed past that charity fundraising target for St. Jude as well.
So what's next here, Ed, in terms of what this means?
Yeah, every investor I've spoken to, every NASA official says this was a resounding success. And frankly, the biggest step forward for civilian and commercial spaceflight that we've seen. You know, it goes way beyond what Bezos and Branson achieved. And for SpaceX, this is a supply-constrained business. They have a big backlog, they say, of willing paying customers. So it's going to be interesting to see how they factor in those launches. They say maybe 4 to 6 over the next 12 to 24 months. Alongside all the other things they're trying to pull off, but a big step forward nonetheless.
All right, Ed Ludlow, thank you so much for that update. For more on the Inspiration 4 mission, the future of space exploration, I want to bring in Space Capital founder Chad Anderson. Chad, we've seen so much progress, or at least high-profile missions, in the last couple of months. What does this one in particular mean for the future of commercial travel?
Well, this one was a lot of fun. You know, we were all certainly watching it over the weekend, and it's for more or less regular folks. I mean, I recognize that it's a pretty expensive mission, but these are 4 people that had never met, sort of came together and said, you know, why don't we, you know, jump on a flight together and go to orbit. And it was just sort of fun to watch, and it felt like, you know, that you could, if your friend had a chartered space flight, that, you know, you could go along as well. So it was really accessible from that perspective, which I appreciate. And, you know, but for me, what's most exciting about this is that this is not a one-off, right? It's not like, oh, this was a successful mission and let's kick our boots off and take a rest. I mean, SpaceX has other big initiatives underway. Their commercial Starlink satellite internet is coming out of beta and launching commercially next month. Starship is gearing up for an orbital test flight, which is the vehicle that's going to take humans to the moon and Mars. You know, Elon says that we can land people on the moon in 2024, and we've got robotic precursor missions to the moon in the next few months. This is a really, really exciting time because there's so much going on.
What kind of investment activity are you seeing at the moment? I know there have been a flood of space SPACs. I'm sure there's private stuff happening on the private side. Has that picked up as a result of these more high-profile successes?
Yeah, certainly. I mean, the only reason that we're talking about space as an investment category in the first place is because of SpaceX. We've been operating in space for decades, but it's only become an investment category over the last 10 years or so. And that all kicked off with their first successful commercial launch in 2009, where they removed the barriers to entry for new startup companies. And so, you know, they ushered in reusability in 2015. They launched the first commercially launched humans to orbit with NASA astronauts in 2020, and now the Inspiration 4 mission. So all of this is really you know, giving investors a lot of confidence, and these successes are really driving investment into the category. We've seen $200 billion in equity investment into 1,500 space companies over the last 10 years, which is up from basically zero beforehand. So SpaceX is really, you know, the key instigator and the key driver behind a lot of the innovation and investment activity we've seen.
And last quick question: there've obviously been a number of space SPACs, but with excitement in any particular category, there are companies that are going to fail. There are going to be companies where there's no there. Is there a concern about that in the space industry?
Well, look, SPACs aren't going away, but they're certainly going to be restructured, which is already slowing things down a little bit. I mean, investment in the space economy requires specialist expertise. And this will become apparent as some of these shake out, some of these SPAC companies shake out and the quality rises. I am all for public markets getting involved earlier and getting in on the upside earlier, but there's this assumption that if it's a publicly traded company, then someone has done some diligence on the company. But some of these SPACs, that's just not the case. So I think the next few months are going to be interesting.
Chad Anderson, Space Capital founder. Always great to have you with us, Chad. Thank you for joining us. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Airbnb CEO Brian Chesky, Salesforce President Brett Taylor, and Chair and CEO of Revolution, Steve Case. Big show. You don't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.